Don't ever give up on your dreams. Don't ever give up on yourself. Don't ever give up on what is meant to be. In this game, we choose our destiny. And if your destiny is to make money trading stocks, then you must accept the losses that come with it. You must accept the difficulties that come with it, and you must embrace the obstacles in order to overcome them. I'm here to make your journey easier than mine was. I'm here to teach you the things that no one ever taught me. And I'm here so you don't have to do it alone. It has been told that a smart man learns from his own mistakes, and a wise man learns from the mistakes of others. I have over 30 trading rules that are responsible for me making and keeping my money. And in part 2 of this series, I'm going to share more with you. I will first tell you what they mean, and then I will tell you the reason that I developed them. If you haven't seen part 1, then I will put the link in the description, in the comments, and at the top of the screen. If you're ready, and so am I. Let's go! Alright, so rule number 4 for me is don't enter on anticipation. What that means is that when we're trading stocks, there's patterns that we trade. And these patterns have been around for as long as stock charts have been around, and they're going to continue to be around for as long as people are trading stocks. Now, each pattern we take has a specific area or location that we need to enter the trade when the pattern has completely formed. Anytime you enter a trade where this pattern has not formed all the way, then we call that entering on anticipation, because we are anticipating that the pattern is going to form, and we are going to enter hoping that it forms while we're in the trade. Now, a lot of times people do this because they want to get in early. They don't want to wait for the pattern to form because they're afraid that if the pattern actually forms, they're going to have to enter at a lot higher price. All right, so here's an example right here on WW. So yesterday, WW is forming this triangle on the 3-minute chart. So if I would have entered WW right here somewhere within this red candle in the anticipation that this is going to break this wedge right here, break this triangle, and then continue to decline, that would have been entering on anticipation because there was no clear signal that this was going to break down. It would have just been me anticipating the trade. So usually what I would do is I would wait for this to break, push back up into the VWAP, and then short it right here for the move lower. The reason why I had to make this rule, I used to do it all the time, and I would try to anticipate trades happening, and the majority of the times I would take losses. When we're trading stocks, we want to trade with the odds. We want to give ourselves an edge in the market so these trades have a better probability of playing out. Anytime we enter on anticipation, we're trading against the odds, and the odds are that the trade is probably not going to work out in your favor. The other reason I don't do it is because if I were to happen to win off of an anticipatory trade, then the next time I'm more likely to break that rule again, and before long I'm taking a lot of losses in a row that were unnecessary. So it's just a bad habit, and I do not want to get into that bad habit of taking trades on anticipation. Alright, rule number 5 is do not short at support. Alright, shorting, for those of you that don't know, means you're trying to sell the stock at a higher price and make money on the stock actually declining in value. It's the same thing with going long at resistance. I usually don't go long at resistance, but in a bull market, if the stock consolidates near resistance, I'm more likely to go long than I am to short at support. Now let me explain the reason why I made this rule. Alright, so on this daily chart right here on CZR, this price of this stock was down here within this range today. And it looked as if it was probably going to keep fading off. You had this whole area down in here for the stock to move lower. Now here's where the problem lies. Alright, if you take a look at the intraday chart, you can clearly see that every single time this price came down to this area, it got bought up, right? Look, 1, 2, 3 right here, and then again right here, right? So a lot of times what I would think is that this stock is actually going to end up breaking this area and then continuing lower. All right. So I used to do this all the time, and I would try to short these breakdowns because breakdowns and breakouts are actually very awesome to trade, especially for a new trader. They happen so fast and they work so quick that a lot of times they're very enticing to trade because when you take them, you get your money and your profits very quick, and it's actually really exciting to see how fast they work. The problem is is that if you're not trading the correct chart, or if the market is actually moving in the opposite direction, a lot of times the stock is just going to get bought up, especially because investors like to buy stocks at lows. They like to buy stocks at support because the stock gets lower and it's cheaper. This would be an example of shorting at support. I would take this thing short right here thinking it's going to break down, and next thing you know it rebounds and moves the opposite direction. Another reason why I used to take these as well is because it's very hard for a new trader to buy a stock that is falling. The better thing to do, and once you get more used to trading, if you're not used to this yet, is to short up here. So I have no problem shorting at resistance. And you can see, just like this is support, this is also a valid resistance level. You can see here that multiple times the stock came to this area and reversed. Right? So it reversed here, here, and here. So the better move would have been is just to wait until the price of the stock moved back higher up into resistance and then shorted it here for the move lower. That way, if it bounces at support, I could at least get back out up here at my entry point, or I could even add shares to take the move back lower and profit down here near support. All right, so you're a lot better shorting at resistance and longing at support. So rule number 6. 3 losses in a row and I quit trading for the day. Now that's the rule. 95% of the time I will quit trading after 3 losses. Sometimes, occasionally, I will take a 4th trade, but if I take 4 trades in a row and I lose on all of them, 100% I am done trading for the day. I will not take another trade that day. If I'm taking wins and losses, and let's say I take a win, then I take a loss, I take another win, then I take another loss and another loss, that's not the same as taking 3 losses back-to-back or 4 losses back-to-back. I do set a max amount though, a max drawdown, so if I lose my max loss, I will also stop for the day. So it's either max loss or 3 trades back-to-back losses, and I will stop trading for the day. So you can see right here on this day was the last time I had 3 losses in a row. And I don't know if I had 3 losses in a row. It was on February 10th. These are my trades for February. So if we look at this right here on February, so I took 1 loss, then I took a win, and then I took 3 losses in a row. I pretty much considered that a losing day. I was struggling, so then I just called it quits and came back the next day. Okay, so the main reason why I do this is because just like our winners need to be bigger or more frequent than our losses, we need a way to regulate our losing days. If we don't regulate our losing days, sometimes, and what used to happen to me, is that I would win for weeks on end, and then in 1 or 2 or 3 days, I would give all of that back, all right? Most of the time, we're not losing because we just suck at trading. It's usually because our emotions are not optimized 100%. Many times it could be the market. It could be that you're tired, you're in a bad mood. Some people may be hungover, they could be going through a breakup. Whatever the case is, it's difficult for us to trade. And we don't want to give up this mental capital that we have built up and lose it all on a couple days. And so the best thing to do is walk away, accept the losses, and then come back fresh the next day. All right, so rule number 7. This is very similar to rule number 6, but it's slightly different. Now, if I have 3 lost days in a row, then I will stop trading for the week immediately. All right, so if I have 3 losing days back to back, that's it, I'm done for the week. And really the reason I do it is because I don't want to have 2 losing weeks back to back as well. I only want to have 1 losing week, and then I want to try to reset. So what I'll do is I'll do like a deep dive into my trades during those days off, kind of figure out, is it my trading that's the issue? Is it the market? Do I need to adapt to something? Are my stop losses too tight? Are they too loose? What is going on, right? Am I trading bad patterns? Am I taking trades on anticipation? Am I breaking any other rules? And that's what I'll use that time to do. It acts as like a reset, right? Just having those days off, not having to worry about taking any more trades, really resets my emotions and helps me move forward. The next week I come in and I start fresh, and I don't think about the previous week, and I don't care if I lost the previous week. I try to adapt, make a plan for this next week, and then during that next week when it starts, I just follow that plan and forget about the previous week. Alright, so that's it for this video. I have a lot more trading rules I have to go over. I don't know if I'll make the next video a trading rule video or if I'll make it something else. If you like these type of videos, please give me a thumbs up. Please share the video and leave me a comment. Alright, I'll see you in the next video.